Hello, welcome back to Ausbiz, Australia's only live streaming business and markets channel. Great to have your company for the afternoon. We kick off this hour, as we always do, between midday and 1 p.m. with the call. 10 stocks you suggest, 2 experts to give their opinion, and many say that today our panel is the dream team. Particularly the blokes on it call it the dream team. Henry Jennings from Marcus today, and also Adam Dawes from Shore & Partners. Good afternoon to you both.
Yes. Hi David. Good afternoon.
How are you coping with earnings season?
Well, it's only just started, so but yes, the slew of economic data that's now coming down the line is increasing, and I think next week or the week after, 26th of August, I think there's 30 or so companies reporting on the day. So it's only going to get busier from here.
It's truth or dare time, isn't it? Most of them.
It is truth or dare, and it's just been complicated this year by the whole coronavirus effects and outlook guidances and no dividends, etc. And we've had the first Super Thursday, I guess, yesterday, and they tend to all dump on Thursdays. Of course, we had Telstra and AMP yesterday. And that's just the warm-up act. Next week it gets worse, and then as Adam says.
Are we seeing a bit of a pattern? Are you getting a sneak peek on whether earnings are coming out a bit better than expectations, or any surprises? For example.
No real surprises at the moment. I mean, Woodside was definitely going to be challenging, no doubt about it. That's certainly one that we're going to talk about today. But
AMP return of capital, and did anyone
kept his job?
Well,
I don't know. AMP obviously is still a disappointment, really. I think to everybody. And Telstra, I mean, everyone talked about the dividend, but look, the dividend wasn't too bad. I thought 8 cents. It's actually not too bad. And they're trying to change the way they are as a business. They've got to become more of a technology play versus a sort of mobile handset business. But that's going to take time to turn that ship around.
Breville, decent result, and the share market kicked it.
Well, I think that's the thing that has been noticeable, I guess, because Telstra have been quite firm going into the results. AMP were pretty horrible going into the result, and then he came out with his own JobKeeper program, which was the special dividend. So some of the dogs have barked, and some of the ones that have held up and been defensive and have done really well, like Breville have actually got kicked in the teeth. So maybe we're seeing that rotation that we've seen in the US from the techs to the more value side of things. Same here that we've seen. Maybe that's going to be a bit more of a theme in reporting season as well. So the high flyers get punished, and the dogs, once there's certainty in the air and you go, okay, we know the worst. Maybe then it gives us sort of an all clear to buy those stocks.
All right, fascinating. We always kick off the call with the stock of the day, one that I pick. This week we've been doing a stock that's released its earnings during the morning. Today a bit different. Mesoblast shares are certainly blasting off today. It is been an absolute roller coaster if you've been in this stock. I was coming up in the lift here at Barangaroo Studios today, 2 blokes, young blokes, under 30, who I had never seen before, going to a different floor to here. What were they talking about? Mesoblast. After news break, and one guy's going, I got in at 395, and when it's being talked about in the lift, I don't know whether that's a worry or not, but it was all because news broke that American FDA is backing its stem cell treatment of acute graft versus host disease in children. The FDA advisory panel reportedly voted 9-1 in favour of its therapy, Ryoncil. A final FDA vote for the drug is due September 30th. It's in a trading halt at the moment. Henry? Are you in it?
No, but I was in it. It was actually a conviction, my highest conviction buy at $1.25 some time ago. But I did get out at around $3.20 months and months ago. It just got a little bit too precarious, I think, for my liking. It's kind of hard to deal with that volatility day to day in a newsletter. Of course, the other day it absolutely collapsed. It was poleaxed by news that the FDA was looking at not granting the approval for this treatment that they've got, and the stock absolutely collapsed. And of course, we were waiting for the day, and last night the news came through that they actually got the approval, 9-1 I think it was on the panel. So this kind of puts in train a bigger picture for them and sets in motion a lot more milestones for their technology. And this has been a long time coming. People have been in Mesoblast for a long time, and the hope for stem cells.
Look, 345 back at the start of 2016. and a roller coaster since then on that 5-year chart.
Yeah.
That's a hairy ride, isn't it?
It's not only a hairy ride, but these guys raise a lot of money. They chew through money like there's no tomorrow. It's expensive doing this technology, and the trials have to be pretty rigorous, and they go on for a long time.
So you've been diluted a fair bit.
So you've been diluted. There's been placement issues, also convertible notes, all sorts of weird and wonderful sort of financing put in place, which has diluted shareholders, which hasn't really helped. But finally, this is sort of the big tick for them, and they can there's still some final decisions to come, etc. But it's looking promising. And then of course they've got a treatment potentially that this can be used in COVID patients as well with acute lung problems there. So it's good, but it's been it's a queasy.
Will you
old,
get back in? Is this the start of? Okay, let me just throw out a stupid sort of observation. Is this the start of it turning into a CSL ResMed Cochlear?
I think it's a little early to say that, but and today's obviously it was up 55-60% at one stage, had a massive leap, and there's a big sort of sigh of relief, and your guys in the lift obviously were pretty happy or pretty sad.
If they got out at 5:30 or something or 5 today.
Trading halter at the moment, isn't it?
No, it's still it's still trading. So it actually traded today, opened at $4.99, had a high of $5.30, currently $4.64, so up 37%.
Right.
But the shorters have got this one at the moment. There's around about 6 or 7% of the stock in shorters' hands.
Right, okay.
So this pop that you saw today was probably a bit of a short squeeze as well for the company. But I bought some last night yesterday afternoon for clients, and I said it's a binary outcome. As with most of these biotechs, it's either going to say yes or it's going to say no. If it says no, it's going lower. If it says yes, the thing's going higher. So it's a punt when you're doing those kinds of trades, and got out on the open today for most of the guys, so they were happy.
Right. Okay.
I bet they were 5:30.
30% overnight.
Well done.
No, $4.99. I got out on the open.
Oh, okay.
Right.
So, I mean, hey.
Well, that's pretty good trading day. I wonder. Try and annualise that.
No, it doesn't happen.
But when you get, is it okay for a normal investor, not a trader?
Yeah.
Is it something where you dribble a bit in because it's past a significant hurdle and you have no idea where it's going to go?
The all-time high was 488, so it blew through that on a sort of technical chart of opening at $5. So that's a real positive sign. I think it'll do some work around this $5 mark for a while now, because you've got the next decision September the 30th. So that's what the stock's going to be trading up to for that announcement. And so you'll start to see some buying coming in once this sort of gets flushed through. And potentially, if that another binary outcome, if it is a yes, well then the stock's it can continue to go higher. If it's a no, which it is fairly political, it can now come back down to $3 again. So I think for a normal investor, it's too hairy, and you probably wouldn't be going into it too hard. But for traders, it's fantastic.
Yeah.
I think this stock actually topped out around $8 or $9 at one stage, about 10 years ago.
Yeah, right.
When it had when it had its big bull run. I mean, when it first started igniting imaginations
10 years ago
and stalking stem cell technology, everyone got really excited about the potential, and this was going to be the new CSL. They have raised a lot of money since then and diluted. So I don't know what the market cap was then compared to what it is now, but it's interesting. But I think this is a very volatile stock. It also trades in the US as well.
Yep.
So that adds a whole new dimension, because obviously they have a greater appetite in some cases for these biotechs than we do. So that can drive the stock price as well. And you wake up in the morning and it's down 10% or up 10% because someone said something.
Not for the faint-hearted.
It's not for the faint-hearted, but you can do well, especially if you talk to Adam about it.
Well, these guys in the lift were talking about it like they would about Fortnite or betting on the 76ers in the NBA, and that's what it's got to.
That's the scary thing, isn't it? That's what it has got to.
I know, it's ridiculous.
We call them flash ramps. They just flash in there, ramp it up, get rid of it, that kind of thing.
But we've gamified the stock market.
Afterpay's been really good for us as in the market. It's been fantastic because everyone can anchor to that story and think, oh, that's what I want to get, and I better ring a broker, or I better speak, or I better do some some
for a
trading.
new generation.
So it has done us really, really well, that gamification.
All right, let's get into your stocks. Good discussion there, and in with Mesoblast if you dare. First stock you've suggested, Adam, you mentioned it earlier, this one from Alex, Woodside, our biggest oil and gas producer, reported a $5.7 billion loss for the first half because of COVID. Underlying profit, $303 million, and dividend, 26 US cents a share.
Yeah, not too bad on the div, I thought. And obviously, probably a little bit down from the previous couple of seasons or so. But look, Woodside has probably the best balance sheet in the oil and gas space. So it is good for investors to look at Woodside, and especially where oil price is at the moment. It is fairly depressed.
Yep.
Henry, you can tell me what the oil price did last night.
It was down 1%
to
$41.
So 41 bucks. I mean, it should be trading 50, should be trading 80 to potentially. When the world gets back on its feet, aeroplanes start moving, cars start moving, the world does, which it will one day. I think Woodside's a good buy down here.
And
Go on.
And the Saudis have closed down all the shale oil producers in the US.
Yes,
in the US.
And let the price rise again.
Yeah.
It was a big number they wrote off. I know.
Well, they already wrote off.
They call it the non-cash impairment. I mean,
but they warned us 3 weeks ago that they were going to do that.
Oh, so that's all right then, is it?
Well, no, but
I guess the issue with Woodside is to do with M&A activity, and Chevron at the moment has got nearly 17% of the Northwest Shelf project up for sale, worth $3.5 billion US. Woodside is kind of the natural buyer of that, and given that around the world oil companies are pulling back big time on capex and everything else and trying to shore up the balance sheet, you've got to think they're pregnant with a big company changing acquisition come capital raise come.
They'll come to the market, raise $2 billion at a deep discount. They'll buy the asset, and then they'll own 30% of it,
something like that,
25, something like that.
Yeah,
that's a good command.
It is.
Moving forward,
it is. But at the moment, I'd be a hold, especially as I don't think the oil price is going anywhere particularly on the upside. So and Woodside's been flatlining for a little while. The good thing is, as Adam says, is they've got the strongest balance sheet probably of any of the oil companies in the world. If you were going to own an oil company with exposure on the ASX, Woodside would probably be the one because it's safer. Santos has got more leverage, but Woodside's a nice, it still pays that dividend, whereas Santos is a bit higgledy-piggledy, Oil Search, Origin, etc. But I'm just not sure Peter Coleman, he's done a really good job operationally. I'm not sure he's the visionary to make the big deal.
Oh.
He is a very good operator of assets, but I'm not sure he's an ambitious visionary in buying and taking Woodside to the next step.
That's an interesting comment.
I don't know.
I've never met him.
Yeah, no. So
I've seen him being interviewed a number of times, and I know that when he was appointed, he came from a very operational kind of background.
Okay, so he's not a deal maker.
Which has been a good thing in some respects, because a lot of guys have gone out and made really dumb deals.
Yeah.
But now we're in the market where maybe there is a chance to make a good big deal using your balance sheet and the strength when other people are suffering.
Yep.
I'm not, and he's been there a while now, hasn't he?
Yes.
I'm not sure he's the right guy to.
All right, hold from you a buy from Adam. Christina wants a view, Henry, on Tesoro Resources, the copper sort of explorer based in Chile. It's bought a whole bunch of leases around its, which is, I love this name. If you're going to explore in South America, you might as well have an El Zorro gold project, which is going to extend that project.
Yeah, it's a great name, isn't it?
Yeah, it's
I'm expecting Catherine Zeta-Jones to turn up any second with Anthony Hopkins and Anthony Banderas. I mean, it's great, the El Zorro project. These guys are in Chile. They've got a good project, as you say, they're extending, and they've got good leases there. The results have been good. I'm just looking through them now. You know, you've got 1 metre at 12 grams, that's not huge. 2 metres at 19.98 was the latest result. Stock's had an almighty run, I have to say. And I guess, you know, this is all to do with the fact that the gold price has also had an almighty run, which came to a crashing,
but from
shuddering
1 cent
halt.
to 20 cents.
Yeah,
Blimey.
yeah, you know.
Doesn't look very liquid though.
No,
does
well,
it in the past?
Gold, no. I think
So
you know, gold in Chile.
It's been up. Oh, look at that. Yep.
It, you know, these are the kind of stocks that you're getting in the lift.
Yeah,
from people. Yeah, you've got to buy this. They've got a great project in Chile. It's going well.
Or they've been left behind. They're a gold mine.
Yeah, they've been left behind. I mean, these guys are in the exploring business. The stock price is driven by announcements. It's driven by the drill bit. Up here, who knows? You know, I wouldn't be piling in up here given the run they've had. I'd be looking at taking. If you own them, I'd look to take some profits. I always think, you know, if you can end up with a holding that's cost you nothing or you made a profit on, and you can let the thing run, it's fantastic. That's the ultimate. So drill bit.
Adam?
Not many shares on issue, so that's probably a good thing for a resource company, especially a gold company. Look, Henry's summed it up pretty well. I think you talked more to the gold price, and certainly the gold price did have a bit of a rest. Peter O'Connor, our analyst, talked about the gold potentially having a little bit of a rest, and then from there starting to move higher again. So he thinks gold has got further legs to go. So, you know, and copper has done very well also. I'd be in the bigger stocks. I wouldn't play around in the smaller end. So it would be a sell from me, and buy some quality.
Okay. All right, Roshan, Adam wants a view on McPherson's, a supplier of health, wellness and beauty products, and also kitchen products as well.
Yeah, we always call them the third drawer company.
Right.
Because they're in the third drawer of
exactly
your, they're in your third drawer in your kitchen, and they're in your probably top drawer of your bathroom or whatever. But yeah, that's what we call them. Cling wraps.
And it is in my third drawer in the kitchen.
Exactly, I told you. Yeah, everybody. So you probably touched one of their products today already. You know, hairbrushes, beauty care, skincare, that kind of thing, kitchen essentials, you know, all of that kind of stuff. So look, the stock's had a good run. It got hit pretty hard around COVID. It's had a good run. It's now sort of consolidating around this sort of $2.70 level. It doesn't look too bad here. We've got a buy on it at Shaw's. It's something I've never really liked as a business. You know, they don't do this, but toilet paper, or, you know, they do ear cleaners and things like that. It's sort of all that sort of smaller stuff. Doesn't have a great margin to it, but everybody's got it. So look, it's a buy from me at this $2.70 level. I think it's okay.
Henry?
I love that, the third
We're both going to steal that.
Well, that's gold. That's mine. That's going in the newsletter for sure. It was always, as Adam says, it's always kitchen knives. I mean, that's what they used to do. They've expanded and diversified into beauty products and healthcare. It has had a good run. The figures have been pretty good, to be honest, and they're getting some pretty good growth. So I don't mind it particularly. It wants to consolidate here at 270. I think that's the critical level. If it busts through there, you could probably see it maybe looking at the chart here down at 240. But if it holds 270, it could pop back up to $3 without too much trouble. But it's kind of it was always all things to all men. It's been around forever. And it just slips under the radar quietly.
Just like those quiet industrial stocks. Just keeps producing.
Breville was a bit like that for a long time. Breville was a bit until you know, George Clooney came along, basically with the Nespressos and all. They made coffee machines, and we went, oh, hang on a second, we all want a coffee machine at home. But Breville for years was, you know, toasters and kettles and boring kind of kitcheny things. McPherson's was knives, and now it's beauty products. It does pretty well. It got some good brands. I don't mind it,
Okay, all right. There you go, Roshan. A good view there on McPherson's. Henry, Avita Therapeutics is something Dion wants a view on. Again, a sort of medical company into skin regeneration, isn't it? And for traumatic wounds and scars. Right across the region, Europe, America.
Yeah, I mean, this was all the go. This was one of the best performing stocks up until recently. Polynovo was another one in that space, and there's a New Zealand one as well that's just listed, which actually looks, I think, probably the best of the three in terms of revenue, in terms of I don't know about the product, I'm not a doctor, but these guys basically do, all three of them do some sort of skin treatment for trauma, whether it's burns or whatever, or a scaffolding. Look at this one in your chart. Yeah, it went absolute nuts. Yeah. The problem with Avita, and it's kind of overshadowed the whole story. The story is the US. Yeah. And the problem is at the moment the US is coping with COVID rather than doing elective surgery and that sort of stuff. So that is really making it hard for both Polynovo and Avita to get in the hospitals and sell their wares. Yeah. And the revenues aren't huge, and the market cap's got to sort of $1 billion plus, and you're looking at it scratching your head going, they're selling $1 million worth of gear a month and it's $1 billion company? Yeah. That didn't add up. Avita made an interesting decision and decided to re-domicile, got the wrong teeth in today, re-domicile to the US and have that as their primary listing. Since they did that, it's been an absolute horror show for shareholders, really. That they've had a consolidation as well. So I think it was a 1 for 20. Right. So it went from being a 40-cent stock to sort of an $8 stock, and now it's $6, whatever it is. Yeah. But that you're now a small fish in a big pond, whereas they were a big fish in a small pond before. And those that got left behind in Polynovo went, oh, what can I buy instead? Avita, they do the same thing, but it's by them. And now it's fallen really out of favour. I don't think the business is bad, but I think the valuation's just got it too stretched on the basis of the revenue, and they clearly had disruptions because of COVID. It would be one that I would avoid for the time being. I prefer Polynovo, and we did really well out of Polynovo.
Polynovo, is that the Fiona Stanley?
I think it is. Yeah, it's got a slightly it's more sort of spray-on skin treating burns rather than it's got a really cool scaffolding. Yeah. But Novasorb is the name of the product they got. That would be my preferred one, and we did really well out of that one, and we did quite well out of Avita as well because we sort of bought the pair. But this New Zealand one that's just come on, that looks quite. I think it's ARX, isn't it?
Yeah, and it's got the technology. I think they use pig intestines or something like that for that.
Revenue-wise, it kind of
looks all right.
It looks all right, and they've been going a long time. ARX is the code Aroa Biosurgery. Yeah, my Kiwi's not great. Okay, I'm going to say fish and chops.
What do you reckon?
Oh, look, my learned colleague has told us everything we need to know already. I think, look, there's some bit of support down here at 650 if you're looking to trade. You might be able to get a little bit higher there, but look, I think it's one, as I said, the market's probably moved on a little bit now on these ones, so it'd be a hold from me. Okay.
All right, a hold on Avita. Now, next suggestion is Domain, the online property advertising business, major competitor to REA.
Yeah, so REA is killing it. Yeah. And Domain's struggling is pretty much the way to look at this. I think overall we expected the housing market to fall, and look, it probably has come off a little bit, but there's still advertising and there's still sales moving through, especially the Sydney market. I mean, it's obviously a little bit different in different areas. Domain has now moved away from Fairfax. I think or does Fairfax still own a little bit?
Own a little bit, I think.
They own a little bit. Nine owns them all.
Nine owns them all now, right. So, look, it's not one for me. Real estate REA is the better business and better run, or well run. I mean, it was an IPO at $2. It's currently $3.57. Not much going on. I'm a holder at best on this one.
Well, we got results next week. Yep. So that'll be interesting. One of the attractions of REA, I mean, apart from the fact that it is the behemoth in the space, is that it's got quite a tight share register, because basically News Corp owns 76% or whatever it is. Right. So it's kind of a liquid. Domain offers, Nine has got a big chunk of Domain as well. So they're both pretty much wrapped in those platforms, and it is a platform stock. Now, I don't know about most people at the moment, but certainly, there's me sitting at home a bit bored with COVID, etc. Can't go out too much, and you start going through Domain and real estate. Oh, I could live there. I could live there. So
Holiday
there
home.
is activity out there, especially regionally. People are now, I guess, looking at alternates to a commute and from Sydney and being locked in an office. You've only got to look around Barangaroo and see that that's, people are working from home, and there are now alternates to that. So I don't mind Domain. It is obviously geared to the property market, so you're hoping that there's going to be continued activity. But we have seen this sort of splurge from people sitting at home, clicking on stuff, looking at stuff.
Yeah. Are they buying though?
Well, it's for Domain. It's about getting eyeballs. It's about getting eyeballs and traffic.
Getting results for your advertising.
Getting results for those people that are selling, and and also moving them up the kind of the scale. So not just pictures, but then you've got in the movies and the premium listings and all this sort of stuff. And I've got friends in the real estate photography business and the real estate business generally, and they're saying things are okay, better than they were last July, and so they're busier than they were last July. Admittedly, that's in the top end, and I think we are seeing this kind of bifurcation of the economy to some extent. The people that have got money and jobs are spending and doing quite well, and the people that haven't got jobs and haven't got any money are struggling big time, and small business owners as well struggling big time. So I don't mind Domain. It's had a pretty good run. I'd put it in the hold basket at the moment. Results pending. It could we could see some decent results, cost cutting.
They have to change their digital strategy though a little bit. I think with Domain, like the whole idea of just trying to move people up the chain is a tough ask at the moment. And I really think that Domain obviously has to offer other services or be something else to it, which is difficult when you've just got house listings in there. But there's always place, Coca-Cola, Pepsi. There's always place for two players in a market. Yeah. So REA is never going to own everything. So I think it is, but hold best.
Okay. All right. Let's just recap the first 5 stocks you suggested, plus our stock of the day, Mesoblast, only for the faint-hearted, and Adam and Henry aren't faint-hearted at the moment, so just the ride is just too hard, and they've got another announcement on the 30th of September. See how that goes. Woodside, a yes from Adam, a hold from Henry. Tesoro Resources, take profits. Henry would be saying certainly not buying at these levels. Adam agrees. McPherson's a yes, good steady player. The third draw company that we're going to describe it forever now, and copywriter to Adam.
Sure.
Always acknowledge the author of that. Avita, a hold from Adam, a no from Henry. Prefers Polynovo or Aroa Biosurgery, a new New Zealand equivalent to come out in that area. And for Domain, a hold from both of them. Quick programming note for you. Join us a bit later today. Evolution Mining Chief Executive Jake Klein joins us after the company's record full-year results yesterday. That's from 1 p.m. Eastern, right here on Ausbiz, if you're interested in your gold stocks, and that's a pretty good one. All right, let's go to the second half of your stocks that you want an opinion on. Adam, Peter wants a view on WiseTech Global, the big logistics technology platform, which is a great story because basically started by a roadie from AC/DC and who went up the chain and ran the logistics for all the AC/DC concerts on tour. My brother-in-law was a manager of AC/DC.
Was he?
And,
really?
Yeah, Michael Browning.
There you go.
And for a number of years launched them in the United States and remembers the founder of WiseTech and can tell you lots of stories about being on the road with him. But I reckon it's just a great story, and now this company is a global logistics, but has had some controversial times over the last couple of years.
Face some challenges, potentially.
Right.
Yeah, look, and I think those challenges are going to be a little bit tougher. They're forecast for earnings to be around about 156 million for full year. However, I'd probably say that they're going to struggle to get those earnings going forward. And there's a couple of brokers sort of saying there might be some downgrades in this result coming through. So
because they've been attacked by short sellers, haven't they?
Definitely.
For a while as well, based on governance and transparency issues.
Definitely. And there's been a couple of sell ratings that are still sort of hovering around this stock as well. So absolutely fantastic success story for Australia as such. But yeah, the logistics side of it is doing well, tracking, transport, all of these things.
Yep.
Has done with a software as a service, sort of business that goes with it. So look, it's not for the faint-hearted as well. Up another 3.5% today, but probably some good value down at around $16. So I think they report next week.
19th.
It's a big day for us. So I'd be holding off until that report. If there are some downgrades in the sector, you probably could pick this up around $16.
Okay.
It has been a wild ride, I guess, for WiseTech, and I think it was J Capital out of Hong Kong that came out with a big short selling report on the stock, and problems with governance, problems with accounting practices. The problem is, it has been a great success story. It's been fantastic. It's billions of dollars worth of market cap now, and it's been fantastic. The problem
it's the W in the Wallix.
Yeah,
it's the tech stocks in Australia.
It is. It has been fantastic, and it is a tech stock. My concern always with WiseTech was they were just. It seemed every day for a period of time they were making another acquisition. Now that to me is a bit of a red flag, only because you're growing through acquisitions. Now I've been involved in stockbrokers that have been acquired, and over the however many years, that acquisitions are never an easy thing. People have egos, people have positions, it's always hard to bed down culture, merge software, merge systems. Now, all these were kind of add-ons, country speciality, logistics businesses, fantastic, great, but they just did so many. Yep. And that was, I guess, one of the problems that J Capital had, was how they were accounting for some of the growth through these acquisitions. I think it was Cargo One, which is their kind of premier product, which has caused some of the issues. The stock's been going sideways for a while. It pops up. It is one of our equivalent FANGs, I guess, and it is the W in our FANG. So it does pop when the Nasdaq pops, and it comes off when that. I just, to de-risk the thing, and this has been our strategy in the newsletter, is to wait for the results, because you're taking a punt on who knows what. It's not like they could come out and say,
particularly when Adam's saying there's a bit of talk around the market that the result may disappoint on the downside.
It's easier to de-risk it by buying after the result. Okay, you may miss the first 5%, but at least now the siren's gone off, the all clear, you can come out the air raid shelter, you can look around, smell the air, and make a valid or an invalid sort of decision based on what you see from the results. So that would be my advice. For the time being, it's a hold. If you've got it, there's probably no point selling it before the announcement, but if you're at all concerned, yes, please do. But otherwise, wait for the results, see how it reports, see how the market reacts to the governance side of things as well, and the accounting side of things. And then, yes, maybe. It's a great story, great stock. I'm just, something in the back of my mind where you get these attacks by these short sellers. They don't just go after companies for the sake of it. And the report at the time wasn't 2 pages.
No.
It was 45 pages, and there was a whole to and fro, etc.
And it took the wind out of the sales of the stock.
Oh,
I think it
big
was
time.
$38 or something like that, and it really took the wind out of it. And it was, and what short sellers like to do is they like to throw a lot of mud, and some will stick, right? And something did stick with this one, and it put a doubt in people's mind about potential there could be some issues. And that sort of investor base probably changed a lot. A lot of instos might have moved away and things like that. And now we're at $20. It's still surviving and doing well from all of those clients that got in at a lot lower prices. But I think that earnings side is going to be really interesting to watch, because that's going to give us that hard number of how this thing has gone. You'd probably think deliveries have done pretty well around this COVID period. You really would have thought, and then more packages moving backwards and forwards. So theoretically, you would think that it should be enough to get it moving, but I think there'll be more downgrades.
All right, okay.
I share an office with a guy who ordered 100 grams of some red powder from the US.
I was wondering where you were going with that when you said 100 grams.
He's in the pharmaceutical business.
Right, okay.
And this is to do with a treatment for hemoglobin for cancer patients. Anyway, the 100 grams arrived in a pallet, wrapped up in bubble wrap, and the whole thing was nearly as big as this desk. It was and inside, once we've opened it all up, there was 100 grams of red powder.
Wow.
There's some logistics involved in that, isn't there?
Yeah, exactly. Some weird logistics. All right, Max wants a view on traffic technologies. Small, they design, manufacture and install traffic signals and controllers and pedestrian countdown timers. I'd never heard of them.
Nor had I.
Oh, okay.
I guess somebody's got to make this stuff.
That's right, and it's listed.
I didn't know it was listed on the.
Yeah, no, it's $12 million market cap, so it's
really tiny.
13 million today.
Oh, is it?
Oh,
Yeah.
it's gone
It's
up.
up 8%.
The volume is, it's a 2.7 cent stock with a volume of 40 grand's worth of stock a day.
It's a little bit difficult, isn't it?
It's very difficult. Clearly these guys are in the sign business, in the traffic signals. They're supposed to be doing. I might mention AI or software as a service, all this sort of thing to spruik it up. But at the end of the day, they make traffic technology. That's what the name does.
Yep.
It's really hard to get a handle on these sorts of stocks.
Sort of the stocks that you wonder why they listed. Don't you?
Well, it must have seemed like a good idea at the time.
Better as a private company.
Well, there's lots of reasons.
Capital.
There's lots of reasons to this. One of them, of course, is that if you're an ASX listed company, it gives you that kind of solid credibility, and you can go to your clients and say, we must be good. We satisfy all this governance because we're an ASX listed company, and that's one of the reasons why a lot of companies do, especially the smaller end. And maybe I haven't got a chart that goes back that far. Maybe they were a $50 million company at one stage, and now they're 12.
Yeah.
Clearly it's geared to, I guess, government infrastructure spend and upgrading traffic signs and doing more roadworks, etc. But it's just a bit hard if you don't follow this
What
stock.
do you call these stocks? Lobster pots or something?
Lobster pots. You're full of them today, aren't you?
I've
you
been
are
doing
good.
this a long time.
Third drawer, lobster pots.
I've got acronyms going as more than you had odd dinners. I look at they were awarded a 5-year contract with Ausgrid. Look, that's a positive sign for it. And the stock rallied, but then certainly got sold back as well. So, I don't think you need to be there. There's plenty of other more exciting businesses out there. And if you're willing to sort of punt on a $13 million company market cap, you could probably find some other ones that have got some better, overall results. So yeah, it's probably a no from me.
Okay. Is Prophecy International a better company to be in, suggested by the here software applications company for corporates?
Look, I think they're obviously reporting as well. The stock's fairly liquid. It doesn't trade too much. Traded 39,000 shares today. The chart's pretty erratic as well. It does get picked up in some of the small cap research that goes out there and some of the newsletters and things like that. So that obviously helps. But it does look like it sort of trades by appointment. So I'd probably leave that one alone.
Yep. This falls into the theme that I've been writing a bit about, cybersecurity.
Yep.
And the two that I've been following quite heavily have been Tesserent, TNT, and Whitehawk.
ACDC.
It's dynamite. So TNT, we've done really, really well out of TNT. Great. It's been a 7-bagger for many of our members that got in when we did. So that's been really, really good. Whitehawk for me was kind of the second best, but there's a bunch of other kind of also rounds. These guys have got relatively good revenue, $14 million in revenue, but it's a bit thin, a bit illiquid, as Adam says. There's another one, VOR, Vortif. And AR9 as well, which they kind of all fall into this cybersecurity. And you've got people at home sitting there with their computers, which are back doors to all these corporates effectively. And I'm sure most home networks don't have the firewalls and the security. They might have Norton 360, but maybe that's it. And the government is clearly spending a lot of money on cybersecurity, and it has become, I guess it has become the front in the new Cold War, if you like. It's no longer spies at Checkpoint Charlie in Berlin. Now it's all about hacking into systems, and whether it's from some unknown foreign
and corporates having people working from home.
It's hard.
It's hard when your computer's hooked in to your work system.
It's a back door. You know, you hack me. And in you go to wherever, and if you're an Ausgrid person sitting there with your home computer doing stuff, and somebody gets in behind, and then can shut down a network or interfere with things. So cybersecurity has become a really big issue, I think, and it is the front line in the new Cold War, whether it's attacks by China, I know we're not supposed to say the person or the country, or Russia, and we've got elections coming up. You know, there's a huge amount of interference that's going to happen in the US election, and there's going to be a big focus on cybersecurity. So I still like the sector a lot. As I say, TNT's been the biggest weighting in my small cap portfolio by a country mile for a long time. And I keep taking profits because it keeps going up, so it becomes even bigger, and you think, well, I can't have 20% in there, I've got to sell some. But Prophecy falls into that basket, but it is a bit of liquid. Right. There's people that like it and keep saying to me, hey, what about Prophecy? You know, you should look at that. And yes, you should. It's got good revenue, it's growing, it's got a couple of good products, but it's just a little bit of liquid, whereas TNT, it's got good backing. Jeff Lord came out of UXC. He's a non-exec chairman, but he's not there for a haircut. He's there to make a difference and make this thing rumble.
So
it's been a great story. Whitehawk as well has been okay. That Vortiv one has changed its business a couple of times. It used to be in Indian ATM machines and things like that. So they've all sort of changed their business a little bit to sort of become that. And Henry's absolutely right. That cybersecurity buzzword is definitely there, and it's probably here to stay. And there's a couple of ETFs that you can use that get that diversification as well. But look, it's certainly a growing part of the market.
Is Tesserent still worth buying at this level? You're taking profits on
I've been taking profits. They had a big flip and they've stalled a bit. I think they might drift back. But if you know, they're 26 cents at the moment. They got to just shy of 30, which was my target. They got to 29.5. Right. I think they might drift back to sort of 2021, but then it's kind of picked those up on the back foot as some of the fast money comes out and the herd moves to the next kind of hot sector. But even I was sent something today suggesting that there was potential acquisitions, not just by Tesserent, because they have done a few, but also that somebody may look at them now they've sort of got to a critical mass. $160 million market cap is it's not a fly-by-night anymore with good management, ambition, good balance sheet and good products.
That's a good combination if you get good management and a good balance sheet
and a good product.
Every time. Yeah, exactly.
Definitely.
All right, Vahir, good discussion there on Prophecy International. Henry, we've gone from traffic lights to parking stations.
There's a theme.
Well, then real estate as well.
Different viewers asked for this. Jack, Smart Parking, they design, develop and manage parking technology. I was reading they just did a deal with London Airport or Gatwick or something.
Yeah, there'll be lots of people there.
Yeah, yes, at the moment. That's a very good point. So I gather it's boom gates and the green signs on when the green lights on.
Yeah, I guess it's
spare bays.
Smart technology, AI technology around parking spaces. Big UK exposure. And clearly that's kind of good at the moment because the UK is, although it's seeing increased cases, as most of Europe does seem to be seeing, it's kind of open for business regardless, and it's holiday season and everyone's trucking off to...
Was it domiciled in the UK at one stage? Because I reading they got rid of their UK board a couple of years ago. And
they
there was
did,
a bit of controversy
from memory, they did
it.
have some issues with governance in the UK. I seem to remember there was some...
A couple of years ago.
I can't remember if alleged fraudulent, I'll go with alleged, but there were some alleged nefarious activities from the UK side of things, which kind of collapsed the share price. It's been not from, it's just...
I would say, by the look of that chart, that probably happened late 2017.
Yeah, I think I think you've nailed it. I think you've nailed it.
Fell off a cliff. Yeah,
I mean, it was really, it was kind of in demand for a while, and it sort of, all this UK talk was really great, but it did seem to run foul of the governance issues, and I seem to remember there was some issue with I can't remember if it's the CEO or somebody, but there were some problems. It's never really grabbed me ever since. It's a penny dreadful. Very exposed to the UK economy. The UK economy is pretty miserable at the moment, down 20% GDP last quarter. Can't get very excited about smart parking.
The story's all right though. Like the actual story's great, and it makes sense for an operator of a car park. They don't have to go around marking tyres. They can just basically charging, and councils can use that same technology when they're in the bays that they use for parking as well. They can just take your picture of your number plate and charge you revenue for staying around too long or whatever. They do have an app as well, so there's other stuff that they can do. But it did run up a little bit on that Gatwick one announcement, and now it's just sort of fallen away again. So there's no need to be there unless their results, I think, comes out on the 24th of August. Their results come through, then maybe you might look at it for some growth. But really, there's not much going on there for me either.
No. All right. Our final stock to take a look at today on the call is from Genworth Mortgage Insurance. Adam, they offer basically lenders mortgage insurance, don't they?
Yep. It's a no.
Simple as that.
Yeah,
right.
no, I wouldn't go anywhere near it. Look, obviously, mortgages, insurance. We've got lots of younger people wanting to potentially buy a house. You need to get mortgage insurance. Yeah. But I think they lost a couple of big contracts. This is only going back from memory. I think they lost was it Westpac?
One of the big banks.
One of the big banks. Maybe it was NAB.
Yeah, it was NAB.
It was NAB. They lost that contract, and that really, really hurt them, and then it really sort of put a bit of a flag on the stock. I mean, if they can't keep a big bank as a client, then there's potentially something wrong. It hasn't really recovered since March 23rd. You just don't need to be there.
Yep.
I'd have to really echo Adam's thoughts, I have to say. I read through the numbers and looking at them. They had an earnings upgrade not that long ago, and everything just looked a bit.
Yeah.
It just didn't. Nothing was really. You couldn't pick anything that you looked at and went, "Oh, okay, there's some light at the end of the tunnel for mortgage insurance in this country." It just, if you want to play recovery in the housing sector and increased activity, I think there's simpler ways to go.
Right.
Insurance company. It's funny, they've had a history of actually surprising to the upside. Yeah. Everyone's kind of written them off, and here we are, we're doing the same thing, writing them off. But then they've come out and gone, actually, it wasn't too bad after all. Okay. It's the classic. Wait till the results come out, confirmation. Maybe then you get a clearer picture. But at the moment,
the market obviously believes or doesn't believe that it's going to be anything fantastic either. So this stock, you'd see some buying in it, or at least breaking out a little bit if there was some activity there.
All right, Chen, a no from both Adam and Henry there. Let's just recap our final 5 stocks. WiseTech, a hold at the moment until they announce their results on the 19th of August, but if it slips back to around that $16 mark, maybe have a look. A no for Traffic Technology. Prophecy, a no. Tesserend and Whitehawk are probably a better bet in that cyber security area. Smart Parking, a no, and Genworth, a no as well. Adam Dawes from Shaw, thank you for joining us.
Yeah.
What are your clients interested in this week? Have you seen any?
We've been buying a bit of Amcor at the moment for the result next week. We think that's going to be a really good. They've upgraded a couple of times this year already, and we like that whole idea of Coles and Woolies, getting pandemic buying. Then obviously they've got to put those packets on the shelves, and that's what Amcor does. But obviously in the US. And in the UK,
defensive stock too.
Very good defensive, good dividend, and that Bemis acquisition I think is going to do pretty well. So we've been buying a fair bit of that, trying to calm my clients down on the banks because that's all they're talking about at the moment. And we've been buying a little speculative stock, 3DP, which is a new near-map competitor.
Oh yeah, we talked about that on the call a week or two ago.
He has got the magic touch. He only has to pop into a shop these days, and people are following him and buying.
Look at the share price.
I know 3DP. I wrote it up a few weeks ago. As soon as he bought it, I went, "This is good. We got to look at this one." So I recommend it as a buy. It's kept going.
It's 26
and there's been another one that he's got involved in as well.
I didn't know.
That's gone really well. He's got the magic touch.
Yeah, exactly. So is that what you follow a lot?
I don't say a lot, but it's good to follow the money. The smart guys that are good operators. Same with Tesserend. I looked at it as soon as Jeff Lord was announced as the exec chairman. It went from 5 cents to 9 cents, and I looked at it and went, that looks interesting. And then of course in the March Madness crash, it came back to 4. So I said, nothing's changed with the company. It's in cybersecurity. This is a gift. and we recommended it at 4 and a bit. But certainly follow the money, follow fund managers, see what they're doing, see what the directors are doing. That's always very important, and see what new investors are doing.
And you can get all that information through Marcus Today. Check them out on the website, and Shore & Partners as well.
There you go.
To get your advice. Thank you, chaps. Good to see you.
Pleasure.
Absolutely.
If you want to suggest a stock for us to cover here on the call, you can email the suggestion, thecall@ausbiz.com.au, and by Twitter using the Ausbiz TV handle. Look, before we head to a very short break, if you find yourself missing out on key parts of the trading day, there's a lot happening during the day, and of course, you've got other things to do in your life. Get the latest from our team straight into your inbox. Sign up for COB, Close of Business, the stuff you need to know about the day in business, finance and startups. You can subscribe, ausbiz.co/join. It'll be in your inbox 5:30 p.m. each afternoon, Monday to Friday. So a lot there, particularly in earnings season. That's it from the call for today. Coming up, don't forget Startup Daily Show between 2 and 3 p.m. and a lot more happening on the pulse the other side of this short break.